Let's continue with the example that we talked about earlier. I had given you information on our beginning balance of inventory, units, as well as costs. And we've figured out that we had 21 items available for sale. We sold 17 items and we had 4 items in our ending inventory. Now, our dilemma is how do we figure out what the cost of goods sold is and our ending balance in our inventory? I told you that there were 3 methods that we can use to do this valuation. The 3 methods are average cost, first in, first out, and last in, first out. What we're going to talk here about is the average method, sometimes also called the weighted average cost method. To do the calculation of cost of goods sold and ending inventory, the first thing we need to do is find out how much goods are available for sale. So the number of units available for sale, which we know is 21. How do we get 21? If you add up all these boxes, you get 21 items. And we also need to find out the cost of those items that were available for sale. How do you find those? We have them right here in our T account. I told you that the beginning balance is $25. The 12th purchase cost is $42. $6 each times 7, that was $42. The 20th purchase was $39 and the 26th purchase was $21. So we would go and list those out. So for the calculate the weighted average method, we had 5 units for $25 each, 7 units for $42 each, 6 units for $39, and 3 units for $21. So we had a total of 21 units that we purchased for a total cost of $127. This is the number of units available for sale, and this is the cost of the items available for sale. To calculate an average cost, all we do is we take $127, which is the cost, divide that by 21, which is the number of units, giving you $6.05 per unit. So now we've converted all these into an average cost. Each of these now we know that we paid $6.05 per unit. So now we can figure out how much was the cost of goods sold. We sold 17 items, so our cost of goods would be 17 items multiplied by $6.05 per unit. Because you know that $6.05 is the average cost of all these items. That gives you $102.80 as the valuation of your cost of goods sold. Now we got 4 units in our ending inventory. How much are those 4 units going to be valued at? Again, you're going to multiply that by the average cost, which was $6.05. So your ending inventory is going to be valued at $24.20. Now that we've calculated these two amounts, we can go and journalize them and post them. So we would journalize $102.80 for your cost of goods sold, and then post it to your inventory and cost of goods sold account, leaving a balance of $24.20 as the value of your ending inventory. The $24.20 will be shown in your balance sheet under current assets, and $102.80 will be in your income statement as cost of goods sold. So if you want to take a look at the formulas that we use to calculate your average cost, the slide shows all the formulas. So the average cost per unit is equal to cost of goods available. We calculate cost of goods available as the beginning inventory plus the purchases during the period, and then we divide that by the number of units available. Again, the number of units available is the number of units in beginning inventory plus the number of units that we purchased during the period. Once you calculate your average cost per unit, then you multiply it by the number of units sold to calculate your cost of goods sold, and you multiply the average cost by the number of units on hand to calculate your ending inventory.